and remove import tariffs on cars. So this is a big new fresh line from this Sino-US dinner on Saturday night, where an extension, this hiatus of 90 days on potential upping the tariffs on $200 billion worth of goods. Trump says China has agreed to reduce and remove car import duties. So we'll keep an eye on the auto sector when that opens. As I say, the oil markets are strong. They're underloved and under-owned. Tracy.
Right. We're all about commodities this morning, man, as well. Speaking of commodities, let's get straight over to the market action with Juliet Sali in Singapore and Agam Vakil in Mumbai. Juliet, what's the latest?
A very broad-based rally today, Tracy, as you've been mentioning, across all asset classes, but equities here in Asia having their best day in about a month. The MSCI Asia Pacific Index up by almost 2%. But watch what happens when China and Hong Kong reopen after that news that Manus just broke there on the auto industry. You said it's all about commodities. It's not just soybeans, also cotton, corn rising. You can see cotton futures there for May delivery up by 2.6%. The Aussie dollar very much a proxy when it comes to these trade relationships. It's having its best day in about a month, its highest level since August 21st. The Kiwi, meanwhile, at a 5-month peak as risk appetite returns. But according to a lot of analysts, how long will this last? That is our quote of the day, of course. And Stephen Innes from Rwanda has just sent a note out saying the worm is already turning and that the US dollar is creeping a little bit higher against the offshore renminbi. The offshore renminbi still up by 0.5%. But he says markets are continuing to price in more stimulus from the PBOC, and the net effect of the 90-day trade war moratorium could weigh negatively on China's trade surplus. But still, at least today, Manus, everything looking very strong across these equity markets and other assets.
Yeah, I think Avery sort of said he'd eat his hat if this really was a substantial change. Let's take it to India. Agam, good morning to you. This week is a big week again for India. We get the RBI. We've just opened. We're on the bid in EM. How does it look to you?
Well, it's certainly looking good. Good morning, Manus, to you as well. We are looking at the Nifty as well as the Sensex trending higher. Both these indices are advancing for the 6th straight day. The Sensex are, clocking gains of around 0.25%. The Sensex also nearly 0.5%. The Nifty Banking Index is also making marginal gains. We must remember that foreign portfolio investors are putting about $1.7 billion in Indian capital markets. That's the highest that we've seen in the month of November and highest that we've seen in 10 months. The Indian rupee, however, is weakening to a certain extent, trending lower by 0.5% as against the US dollar, currently at around 69.97. So if, say, for the Indian rupee, we're seeing strength in Indian equities right now.
Yep, a sea of green this morning. All right, Juliet Sali and Agam Vakil, thank you so much for that. Let's check in now on the first word headlines from around the world. Here's Deborah Mao.
Tracy, Theresa May is facing a vote to bring down her government should the House of Commons reject her Brexit deal next week. Labour says it's inevitable that the party will propose a no-confidence motion should May lose the debate on December 11th. That would put the UK on course for an early general election, with the EU saying the only options are the deal on the table or cancelling Brexit altogether. The EU is turning up the heat on Italy, demanding the populist government lower its budget deficit target from the stated 2.4% to below 2%. La Repubblica says Brussels wants spending cuts of at least $5 billion to avert potential sanctions for breaching EU budget rules. The Italian parliament will debate the proposed budget on Wednesday. President Emmanuel Macron held an emergency cabinet meeting after more than 400 people were arrested in Paris as clashes with police continued for a third straight weekend. Dubbed the Yellow Vest movement, what began as a protest over fuel taxes has grown into general anger at high living costs. There was also violence outside Lyon and in Toulouse, Nantes, and in the Ardennes region. Israeli Prime Minister Benjamin Netanyahu is facing new corruption accusations, with police recommending he stand trial for alleged bribery in a third case. Investigators say they have more evidence that he traded influence for favors, something the Prime Minister denies. The decision to indict lies with the Israeli Attorney General, who still hasn't ruled on two other corruption cases against Netanyahu. And SpaceX intends to go ahead with its 18th launch of the year later Monday, having postponed liftoff at the weekend. It's not clear what forced the delay, which was announced by a tweet just before midnight Saturday. The launch aims to put 3 small satellites into orbit on a mission to scan the globe for pirates targeting shipping. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg. Tracy.
Thanks so much, Deborah. Well, markets have been moving strongly to the upside after the trade truce struck between the U.S. and China at the G20 meeting. Presidents Trump and Xi agreed to pause the introduction of new tariffs and intensify their talks. Bloomberg's Eric Schatzker has all the details from Buenos Aires.
It's no exaggeration to say expectations were extremely high heading into this meeting here in Argentina. And while leaders of the world's top 20 economies weren't able to agree on many issues, they did succeed in diffusing some of the tensions that lately have clouded the outlook for the global economy and for financial markets. Here are 3 key takeaways. The big one, of course, a truce in the U.S.-China trade war. Also, a victory for Donald Trump on issues ranging from climate change to multilateralism. And thirdly, a bullish sign for oil after Russia and Saudi Arabia agreed to extend their deal on production cuts. Now for a few details. The U.S. gave China 90 days to show progress on reforming its trade practices, and in exchange will hold off on raising tariffs on Chinese imports. Those new tariffs were due to take effect on January the 1st. The White House called the dinner between President Trump and President Xi, quote-unquote, highly successful, and China said it had prevented more economic friction. Now we wait to see where China is prepared to make concessions. Trump scored a win over his G20 counterparts on the so-called communique or closing statement with language that protects or advances his administration's policies on protectionism, energy security, and the WTO. And finally, in another meeting on the sidelines that overshadowed the main event, Russian President Vladimir Putin and Saudi Crown Prince Mohammed bin Salman agreed to continue managing oil supplies. That paves the way for OPEC to cut production at its December 6th meeting in Vienna. Don't read too much into the smiles you'll see in the photo ops or talk of consensus. This was a difficult meeting, and deep divisions remain. Eric Schatzker, Bloomberg, Buenos Aires.
That was Eric Schatzker for us in Buenos Aires. We are still getting headlines post the meeting coming across on the Bloomberg. We have Donald Trump tweeting that China has agreed to reduce and remove tariffs on cars coming into China from the U.S. Currently, the tariff is something like 40%. We should just note here that China has already cut its main tariff figure on passenger car imports from 25% to 15% earlier in the year. The 40% being discussed here is the punitive tariff that's actually targeting U.S. cars only. Well, on that note, let's bring in Gareth Nicholson. He is head of fixed income discretionary portfolio management over at Bank of Singapore. Gareth, it's so lovely to see you this morning. I suppose we should, of course, start with the outcome of the G20 meeting, the trade truce, as we're calling it. Is the relief rally justified at this point?
We think so. I mean, we're actually calling it a ceasefire than a truce, but sentiment has been so bad for the last few months, as you know, and I think that's kind of accentuated with the way that, you know, the first question is how long is this going to last? No one believes it's actually going to happen, and that just indicates that even with all this positive news, and we really feel there has been some positive change. You've got the ceasefire, so there's going to be now time, at least 90 days, to negotiate more deals. As you just highlighted, Tracy, China seemed pretty keen to work and to find a solution, or at least to cater some of the needs of Donald Trump. They're not going to bend over, but they're definitely going to look to help where they can. At the same time, this has also taken a bit of the real heat away from, is the U.S. really keen on kind of a Cold War, kind of economic Cold War friction, or is the focus back on economy? And we feel the focus is back on the economy. You've had talk with, the Fed kind of reducing some of the noise there. So we think this is positive. For the medium term, it's good news.
Gareth, just how concerned are you about data? We'll spend more time about the Fed, but I looked at the global economy. This is on MLive this morning. The Philly Semiconductor Index and also Korean exports to China dropping quite aggressively and certainly fading away. Is there this desynchronized threat to the global economy?
Well, I think that one thing that President Trump has brought in is that it's not going to be the same for the next few years with regards to international trade agreements, how things are done. I think the protectionist agenda is still very much there. I think, as you highlighted, the G20 talks are still very tense. And the ceasefire just gives us some breathing room, which the markets really need. So in the medium term, short to medium term, we feel this is constructive, but the longer term, there's still a lot of questions to be asked. And as you highlight, some of the indicators that are maybe slightly longer term are still pointing that frictions need to be cleared up. But at least we have 90 days of peace, at least trade peace, and we can see how it flows from there.
Right. So on that 90-day note, Gareth, how are you actually going to trade the next 90 days? Is now the time to be taking on risk positions?
Well, our view is going into this year, last year was fantastic. 2016 was even stronger. This year has been a year of consolidation. Cash has been king. You need to stay nimble but active. So for us, yes, this is a time to look to add risk. For instance, in the fixed income space, we like country-specific risks, even regional bases and definitely geographical. Buying the broad basket, you're diluting yourself with too many good risks and bad risks, and we think you want to be more idiosyncratic, concentrate on the good risks. You don't need to chase the really high-yielding names, the frontier stuff. That was a trade for the last few years where, rates were low, leverage was cheap, volatility was low because of the QE. You just aim for return. Now it's about risk return. Now it's about finding, a balanced return. Double B bonds are offering a good 7%, and that's a good return for a decent amount of risk, and we think that's the way to play it.
I'm curious to see how much China bond exposure you want to take. We're running the MLive story this morning. China's mainland corporate bonds set for the best performance in 3 years with an 8% gain. I look at some of the data in China. It's in the GTV library, and this is really beginning to roll over, isn't it? We're looking at money supply on the way down the blue line. We're looking at the overall aggregate financing, but these bond markets are in for a pretty good turn, aren't they?
Yeah, I agree with you. I think China has obviously been a very popular place to kind of, for the US to kind of bash. And the world economy has got on top of that, particularly in the bond market and the equity market. But within the bond market, a lot of the bond market is driven by stimulus measures that the Chinese government can help with. For instance, a moderating of the housing policies that we've seen been very strict over the last few years. Infrastructure spending is likely to increase next year. Corporate tax cuts that increase growth. There's a number of factors that we still feel China is likely to help stimulate, and taking off this noise with the trade disputes and giving some time for further negotiation to be done, we see this being positive. And China is one of those standout opportunities at the moment, given fundamentals are okay, valuation is attractive, and sentiment is turning.
Gareth Nicholson there, thank you very much. You stay with us. We've got a little bit more to dig into on the fixed income space. Still ahead, crude climbs as Russia and Saudi Arabia agree to extend their cooperation. We'll have the very latest on the oil market.
Yep, but up next, Jay Powell propelled U.S. equities to their best week since 2011 with his speech last week. Will he have as dramatic an effect when he gives testimony to Congress on Wednesday? This is Bloomberg.
U.S. stocks enjoyed their best week since 2011 last week. They were boosted in no small part by comments from Fed Chair Jerome Powell that the market took as being dovish. However, Goldman Sachs, JP Morgan, they're sticking to the forecast that the Federal Reserve will raise interest rates 4 times next year. Congressional Joint Economic Committee on Wednesday. And we get the latest non-farm payrolls data on Friday. It's going to be a blockbuster week. Gareth Nicholson is the head of fixed income and discretionary portfolio management over at Bank of Singapore. We're back on home ground here, fixed income. Want to get your sense, I mean, we're going to speak to Clarita a little bit later on. We'll hear from Powell later in the week. This is a chart in the GTV library. This is the economic surprises in the United States of America. We are at the lowest reading in a year. If the Fed needed justification, the data is beginning to help Jay Powell, isn't it?
Oh, for sure. And I think that's, I mean, this is big news for the bond market and you know, FX as well. I think the Fed has been pretty smart in the sense that they were maybe painting themselves into a corner, you know, with a rigid approach to, you know, we're raising rates. This is the trajectory we're going at. We're following the dots, and nothing's really going to get in the way. And I think that the recent message is a little bit more open to the fact that they're going to be more data dependent, and particularly if data starts turning, maybe we won't have such an aggressive rate hike. I mean, you've already seen the 3% and the 10 years dropping. Sorry, the 10 years dropping below 3%, which illustrates that, you know, maybe the market is reviewing the neutral rate, the terminal funds rate, and revisiting. Maybe it might needs to be lower with regards to where that's going. So I think this is a bit of a pause. So dovish stance is giving the market a bit of food for thought that they're not just going to run away and potentially make another Fed error that we've seen in the past without listening to where the market's going, and combining everything from, you know, the strong employment data that's come out of recent to also some of the other numbers which are coming up maybe a bit softer.
Gareth, you mentioned the magic word there, which is, of course, dots, the Fed's dot plot. You can pull that up on the dots function on your Bloomberg there. I guess I'm wondering, just to take the other side of this argument, is there a possibility that the market has gone too far in betting that the 2019 dots aren't going to be realized here? Well,
I suppose historically the dots have never been realized. I think that is the facts. Our base case is similar to what you're talking about. Some of the other big houses, JP Morgan and Goldman Sachs, will 4 rate hikes still next year, but very much data dependent. We need to see how this plays through, and I think the key with the dots is going to be at each meeting, seeing how the numbers come through. For instance, you've got payrolls coming this week. It's probably going to be softer than last one. I mean, the last one was phenomenal. As you said, you know, economic surprises down. There's a few data points which are showing a slight weakness, and we think the Fed has kind of given themselves a bit of a credibility in case they decide to move away from the dots, to maybe be a bit slower if the data does change. So we think this is a positive move from the Fed, giving themselves flexibility in this changing market.
Well, of course, Gareth, they're going to have a news conference after each of the decisions, so this is going to be an opportunity in terms of forward guidance. I suppose his hallmark, Powell's hallmark of forward guidance. Let's talk about the curve. Let's talk about your market and where we are. Looking at 5-year paper this morning, we're looking at a rise in yield, 2.88% for 5-year government bonds. Looking at 3 5s, you're only a dot away from inversion. This is probably the closest curve that's closest to inversion. Will inversion be averted 2019?
Oh, tough question. I think first thing we need to talk about inversion is it a fantastic indicator for recession? Because that's what most people are looking at the curve for on a broader level. And whilst it's been accurate, the lag from when you know, the curve gets inverted to when there's actually a recession has varied massively. And some of the numbers between them have been very large. So we think by itself, inverted curve is not the best predictor of recession. Saying that, will we see the curve invert? I mean, I think it's likely. I think what we've seen, particularly, we're looking at the 2s, 10s, which is a similar sort of picture. We've seen some flattening, but not that much. I think what the market's taking from this move is that, yes, the back end's moved down, but so is the front end. It's kind of been in parallel. So it's saying to us that the overall market view hasn't changed that much. I think I read over 80% of fund managers believe that early 2020 will be the kind of real downturn for at least some of the bigger markets. We've had 10 years of expansionary period, and that has to come to an end. And inversion is a signal of that. How long will the gap be before we get there? If we see an inverted curve this year, we still could have some time before we get that downturn. And our base case is, the curve is going to remain flat, so maybe get a bit flatter from here. We don't think you're getting paid for long-term duration, but as an indicator for the economy, there's numerous signals you've got to look at, and an inverted curve by itself is not the best.
Yeah, amazing to see market participants really coalesce around that 2020 mark. All right, Gareth Nicholson, Head of Fixed Income Discretionary Portfolio Management at Bank of Singapore. Thank you so much for that. I should just mention here that Fed Vice Chair Richard Clarida will be speaking exclusively to Bloomberg later today. That will be at 3:30 p.m. Dubai time. But before then, could Standard Chartered be about to shed jobs in Dubai? This is Bloomberg. Let's get you a quick check at the latest business flash headlines. Here's Deborah Mao.
Tracy, UBS has stolen a lead on rivals in China, becoming the first securities firm to get approval to take control of a local joint venture. The Swiss bank wants to buy a further 26% of UBS securities to take its interest to 51%. CEO Sergio Ermotti told Bloomberg it underlines a long-term commitment to China. Competitors including JP Morgan and Nomura are also seeking control of joint ventures. The White House says China would consider approving Qualcomm's $44 billion bid for NXP if it is presented again. The U.S. team says it's part of a wider agreement struck by Presidents Xi and Trump in Buenos Aires. Qualcomm scrapped its bid for NXP in July after an almost 2-year wait for approval. Chinese regulators declined to clear the deal, though Beijing later expressed regret over the collapse. Standard Chartered is said to be cutting jobs in Singapore, Dubai, and other key markets as part of a drive to reduce costs. Sources say as many as 100 positions could be involved in Dubai alone, including some senior roles. CEO Bill Winters has launched a campaign to reignite growth at Standard Chartered, including plans to simplify the bank's structure, lower operating costs, and free up liquidity. And that's your Bloomberg Business Flash.
Deborah, thank you very much. The latest headline has reignited the risk-on momentum in these markets from Mr. Trump in a tweet that China has agreed to reduce and remove car and import duties. You've seen Asian stocks rally up 2%. Oil is bid as Russia and OPEC agree to extend their relationship. Yuan is stronger and S&P futures are on the march. This is Bloomberg. It's destination ground zero for a trade war. If you want to trade currencies, this is where you go. Look at the Aussie dollar. It's Sydney. It's just gone 3:30 in the afternoon. What a beautiful, beautiful day. What a beautiful spike in the Aussie dollar. You're seeing the highest levels since August of this year. If you believe there is a durable, substantive truce in negotiations between China and the United States on trade, this currency is just off its 2-year lows. This is the alpha of trade wars. Let's check in on your first word headlines from around the world. Deborah Maz standing by.
Manus, President Trump says China has agreed to remove tariffs on cars imported from the United States as part of the two-way pledge to halt any new trade measures for 90 days. Washington had been set to raise duties on $200 billion of imports from January 1st, with the White House debating whether to tax all goods from China. Trump now says Beijing's agreed to reduce and remove tariffs from the current 40%.
I look very much forward to the discussion, and I'm sure discussions after. But the relationship is very special, the relationship that I have with President Xi. And I think that is going to be a very primary reason why we'll probably ending up getting something that will be good for China and good for the United States.
Theresa May is facing a vote to bring down her government should the House of Commons reject her Brexit deal next week. Labour says it's inevitable that the party will propose a no-confidence motion should May lose a debate on December 11th. That would put the UK on course for an early general election, with the EU saying the only options are the deal on the table or cancelling Brexit altogether. France's President Macron has held an emergency cabinet meeting after more than 400 people were arrested in Paris as clashes with police continued for a third straight weekend. Dubbed the Yellow Vest Movement, what began as a protest over fuel taxes has grown into general anger at higher living costs. There was also violence outside Lyon and in Toulouse, Nantes, and in the Ardennes region. SpaceX intends to go ahead with its 18th launch of the year later Monday, having postponed liftoff at the weekend. It's not clear what forced the delay, which was announced by a tweet just before midnight Saturday. The launch aims to put 3 small satellites into orbit on a mission to scan the globe for pirates targeting shipping. Global News 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg. Let's get over to Juliet Solly now for a look at the markets. Jules.
Deborah, December generally tends to be a good one for investors, but we've also got Presidents Trump and Xi to thank for this very broad-based rally we're seeing across Asian equities this Monday, up by about 2% on the MSCI Asia Pacific Index, holding at its highest level since October 10. You can see markets right across the region are gaining, specifically, I should say, a lot of positive movement coming through in these EMs. Have a look at Thailand, have a look at the Philippines, Australia getting close to the close there, up by 1.7% in Sydney. It's not just equities, we're also seeing commodities rise across the board. We've been talking about soybeans, about corn, cotton. Have a look at aluminium in Shanghai, up by 1.5%. You can see cotton up by over 3%. And then we've seen this huge rally coming through in Brent and WTI oil as well. Brent now up by almost 5% at $62 a barrel. We are seeing that commodities again really move across from the dollar. Bloomberg Intelligence saying that commodities are really ripe to take this bull market. And I also want to show you what we're seeing in terms of the car automakers, I should say, because we had that tweet at the top of the hour from President Trump. Not a lot of details, but essentially saying that China has agreed to reduce and remove car imports. We'll see that reflected in the US session, no doubt. But have a look at Subaru and Mazda in Tokyo. And then on the lunch break, Brilliance, China and Geely Auto, both very strong. So they could actually see some more positive momentum coming through in the afternoon session as well, Tracy.
Yep, and it's not just equities and commodities and now cars, but also Asian currencies that seem to be getting a boost from the reprieve in this trade spat. What kind of gains are we seeing?
Well, of course, we've been talking about the Aussie up by about 0.9%, very much a proxy for the relationship between the US and China. But when you look at Asian currencies in particular, the South Korean won, the front runner today, it is at a 2-month high. You've seen a lot of movement coming through across these EM currencies. The renminbi also firmer by 0.6%, although we have had a couple of notes saying that you could start to see that pair back somewhat. But the yuan and Aussie certainly very strong performers. When you look at the Indian rupee, though, it is actually getting hit today, falling from a 3-month high, down by 0.6% against the dollar. We had that economic data missing in India, also crude oil prices gaining, and the RBI about to start their 3-day policy meeting today. So that is one currency under pressure, but broadly speaking, it is a story of a weak dollar and strong Asian currencies today. Manus.
Thank you very much, Juliet. Let's talk about one of those commodities on the march. It's oil. It's surging on the back of Saudi Arabia and Russia extending their deal to manage the market into next year. The two countries have yet to officially confirm new oil curbs, but President Putin said they'd reached agreement. And the Canadian province of Alberta has this morning taken an unprecedented step of ordering its oil producers to cut production. Let's get more from our Asia energy editor, Aaron Clark. He joins Tracy and I now from our Tokyo studio. So some pretty big pieces of news to digest. Let's start, first of all, between Putin and the G20. What exactly did he say at the G20 that has so emboldened markets this morning?
Yeah, I think that's the biggest bit of news. Russian President Vladimir Putin met with Saudi Crown Prince Mohammed bin Salman over the weekend at the G20 summit and basically on the sidelines. And they agreed to extend this agreement to manage the oil market. Now, this is really the same group, OPEC plus Russia, who we saw implement cuts of about 1.8 million barrels a day starting from January of 2017. Those cuts lasted about 18 months, and they really cleared this global oil glut. They contributed to a rebound in prices. Brent was over $80 a barrel in October, near a 4-year high. So, they've done this before, and it really helps sort of stabilize prices, at least from a producer perspective, and it seems like they're going to continue that agreement going forward. Oil prices, in the meantime, of course, have fallen over the last month or so, but they rebounded this morning. Both Brent and WTI are up about 5% today.
Right. So, Aaron, we do have an OPEC meeting coming up in Vienna. Manus Crownie, he's going to be going. He's packing his sweaters right now, I'm sure. What does this mean for that meeting? Are they going to be able to agree on a wider production cut agreement yet again?
Yeah, clearly the production cuts are going to be the primary topic of discussion. An OPEC advisory group has recommended that the group cut production by 1.3 million barrels a day. But the ministers don't always, go for what the advisory group recommends. So we'll just have to see, if they do cut production and by how much. But the advisory group has recommended 1.3 million barrels a day of cuts.
The other big piece of news, I find this quite impressive. Alberta, they've ordered a cut for the first time since the 1980s in Canada. Does this suggest a much bigger crisis, or is it idiosyncratic? They're trying to close the gap between the price of Canadian crude and US crude, which has collapsed by 60%. In terms of oversupply, what does this do?
Yeah, I think it's not really a crisis, but it does show how these Canadian producers are really suffering. They sell their oil, their heavy oil, at a discount to the benchmarks like WTI and Brent. So they've been hit a lot harder than other producers that are selling more quality grades. This is what we're seeing is a coordinated effort by the government to sort of coordinate these cuts. And spread out the pain among producers in sort of an equitable manner. So I think that's what it shows. From time to time, these producers do cut back on their production to try to impact prices, try to boost prices. But this is just sort of a coordinated effort by the government. We'll have to see, how much prices react when they start in January. I think they're going to cut about 325,000 barrels a day of production. That's about 8.7% of the province's crude production.
All right, Bloomberg's Asia energy editor Aaron Clark there. Thanks so much for that. WTI still up more than 5% this morning, by the way. Pretty amazing moves there. Well, let's stay in Tokyo because French President Emmanuel Macron has said he's committed to the Renault-Nissan alliance despite the arrest of Carlos Ghosn. He discussed the issue with Japanese Prime Minister Shinzo Abe on the sidelines of the G20 meeting in Argentina. Our chief North Asia correspondent Stephen Engel is following all the drama for us. Steve, what's the latest?
Well, the latest is the government's getting involved a little bit, of course, on the sidelines of the G20 in Argentina. As you mentioned, Shinzo Abe, the Japanese prime minister, meeting with Emmanuel Macron. And Macron, not surprisingly, said he'd like to see the continuance and the stability of the alliance, which, of course, the French government owns a 15% stake, a very significant stake in Renault, which then owns a sizable 43% stake in Nissan. While Macron, of course, has a vested interest here, Renault employs about 50,000 workers. They don't want to see a deterioration of a partnership which many claim really benefits Renault more than it does Nissan. Meanwhile, Shinzo Abe, for his part, said this is something that needs to be resolved going forward by the companies, not necessarily the government, but the governments. But it's an interesting time, obviously, right now, given that Carlos Ghosn still is sitting here in a Tokyo detention center, still has not been charged, and it's been quite some time since November 19th, when he was first arrested here.
Well, it's not just he who's in prison, it's he and one of his trusted advisors. Any progress in terms of the legal fate? Will that be extended, Stephen? That seems to be the base case assumption at this juncture.
Yeah, that's right. There's several options for prosecutors, and that is they've already gotten another extension of the detention, basically a detention warrant approved on Friday by a Tokyo court that could do it keep him in prison or jail for another 10 days, which would be 7 days from today. So we're talking December 10th. But we're also hearing, as prosecutors are building their case against both Ghosn and Greg Kelly, the former representative director, who's also been, implicated here, prosecutors could arrest them again on other charges, and that would allow prosecutors to, apply for an even further detention. So it's really shed a lot of light on the Japanese legal system, which has a 99% conviction rate. But right now, even in the Japanese newspapers. This is a full-page article examining the Japanese legal system and whether it actually gives, the defendant, a fighting chance to defend themselves.
Right. Stephen, this is exactly what I wanted to ask you because, of course, you're on the ground for us in Tokyo. I'll be joining you in that city tomorrow, I believe. But what are you seeing in terms of the local media reaction? How are the Japanese people actually discussing what is one of the biggest corporate stories to come out, at least this year?
Yeah, well, the media has been very interesting. There's been a lot of different scoops from whether it's the Kyoto News or the Nihon Keizai Shimbun, Asahi, Mainichi, a number of different scoops. And that's what we're getting. Most of our news is coming from leaks from within the prosecutor's office to these local papers. And the latest one is that apparently, according to Kyoto News as well as Japan Times, Carlos Ghosn is refusing to sign any confession, or what he is allegedly saying, a false confession. And that is where a lot of the prosecutors get that 99% conviction rate. They beat the defendant down through interrogation without their lawyers and oftentimes get confessions. But according to local media, Carlos Ghosn is standing fast, claiming his innocence.
All right, our chief North Asia correspondent Stephen Engel there for us in Tokyo. Well, we do have some breaking news crossing the Bloomberg once again. Qualcomm saying that the deadline for the NXP deal is past. The deal is terminated. It's making those comments in an emailed statement to Bloomberg. Of course, that is after the story that she said he was open to blessing Qualcomm NXP if it was presented yet again. Qualcomm saying definitively that the deal is dead. Manus.
Yeah, Tracy, up next we're going to talk a little bit more about deals. This time, SoftBank's telco unit IPO will make history in Japan as it debuts without a price range. We'll have more on the detail from Tokyo. This is Bloomberg.
It's 1:46 p.m. in Tokyo. We have the Nikkei up 1.4% this morning off the back of that big relief rally in risk assets post the G20 meeting and the agreement of a trade truce between China and the U.S. The Nikkei 225, by the way, beating Japan's Topix index by the most in 20 years. A pretty abnormal move, I got to say there. Well, let's check in on the Indian markets now with Bloomberg Quint's Niraj Shah. He's in Mumbai. Niraj.
Hi, good morning. Well, maybe not as great as the other Asian markets are. Now, two ways to look at it. Either the Indian markets have had a bit of a rally leading up to the event, which we did, or the fact that crude rises and that puts a bit of a spanner or a bit of a lid on the gains today. So still trading about 0.5% higher, but that's the extent of the gains. The real chart to monitor, and there are two charts to monitor today. One, the fall in the currency because of the rise in crude prices. We are back to below 70 to the dollar. Remember, the whole of last week we've been talking about how the currency's been gaining strength. We almost nudged 69.5 on the upside, but back to sub 70 today for the currency. So that is one key thing to monitor. And then, of course, the strength in private banks keeping the markets excited. So the Nifty Bank, the third index on your screen today, which is trading about 0.5% higher because of the strength in the private banks, which have a higher weightage on the index as well. So yes, in the green, but because of the crude prices, a bit of a tempered optimism, I would say. And the currency is certainly the eye of all traders right now.
All right, Niraj Shah in Mumbai, thanks so much for that. Let's get a quick check of the latest business flash headlines now. Here's Deborah Mao.
Tracy, Deutsche Bank boss Christian Saving says he doesn't expect to be personally targeted in a money laundering inquiry in Germany. Police raided Deutsche's Frankfurt HQ and several other offices last week. The investigation touches the private wealth unit overseen by Saving before he became CEO. But he told Bild am Sonntag that the bank conducted its own inquiry and considered the matter closed. Dissident shareholders at Takeda Pharmaceutical are to hold a news conference later in a final attempt to convince investors to abandon the $60 billion takeover of London-listed Shire. The Sunday Times says a group of Takeda family members and shareholders want to derail what would be the biggest ever international takeover by a Japanese company. Investors will be asked to approve the deal on Wednesday. And Vietnam Airlines is reported to be pushing ahead with plans for an IPO in the new year. The Financial Times says the carrier aims to offer shares on the Ho Chi Minh City Stock Exchange in the first quarter, although the final decision on listing will be made by the government in Hanoi. The report advances a plan that originally saw Vietnam Air aiming to come to market by the middle of 2019. And that's your Bloomberg Business Flash. Tracy.
Thanks for that, Deborah. Well, SoftBank is to make history with the $21 billion IPO of its wireless unit, set to be the first to debut in Tokyo without a price range. Bloomberg tech reporter Pavel Alpayev covers SoftBank and joins us now.
Mengecilkannya sedikit, saya akan zoom out. So di sini apa yang saya ingin lihat adalah divergence. Divergence bagi mereka yang belum faham strategi divergence, anda boleh refer to webinar saya yang dahulunya. So apa yang kita nak cari adalah di sini MACD menurun dan di sini pun dianya menurun juga. Tapi di sini tidak ada divergence. Di sini tidak ada divergence. Nanti saya akan lagi explain tentang ini. Saya lukiskan dengan warna yang lain di sini. Saya letak okey di sini. So ianya condong ke bawah. Okey, di sini saya tukar juga warnanya. Ini adalah untuk reference divergence ya. So di sini kita lihat tidak ada divergence. Tetapi apa yang bila ianya ada dua orang kata bump ataupun bonggol dua, ini menunjukkan sesuatu yang terjadi di atas trend ini. Okay. Selalunya apa yang kita dapat lihat adalah double top, head and shoulder, ataupun setengah orang ianya akan nampak change of trend pattern di atas ini. So di sini adalah untuk apa? Bila ada dua bonggol di atas ini, ini adalah untuk menunjukkan pertukaran pattern berada di atas. So tidak kira ada divergence pun ataupun tidak, tetapi bila kita tengok di atas, ianya ada pertukaran arah pattern di sini. So ini adalah take untuk kita untuk mengukuhkan lagi strategi parabolic sell ini. Okey. So, kalau kita dapat lihat di sini juga, dapat lihat di sini trendnya makin lama makin menurun ke bawah. Ya, tetapi kita nampak di sini dari atas ke bawah. Di sini ada divergence. So, ini lagi mengukuhkan strategi ini. So kalau kita dapat lihat di sini, di parabolic SAR, saya zoom in di sini. Maaf. Saya zoom in di sini. Kita ada divergence, kita ada parabolic SAR berlakunya di support ataupun resistance. So di sini kita dapat lihat ianya berada di mana? Di support ataupun di trend line. Trend line berikut. So ini signalnya itu lebih berkualiti. Lebih berkualiti. So selepas kita dapat pertama kali ataupun first petanda parabolic SAR ini, kita menandakan garisan di sini. Sama juga di sini, kita menandakan garisan. So bersertakan dengan ada divergence ataupun dua bonggol. Ataupun ada pattern, change of pattern di atas ataupun di bawah support dan resistance. So the next one, stepnya adalah untuk apa? The next one adalah kita untuk pergi ke time frame H4. Di sini kita pergi ke time frame H4 di sini.
Tunggu sekejap want to just congratulate
thank you
Grandmaster Mentor Ibrahim.
Thank you very much Mr. Mario for coming here to support us. Okay.
Most welcome. How's everybody doing? All good?
All good.
Fantastic. Keep up the good work, bro.
Okay, thank you very much Mr. Mario. Okay. Jadi di sini apa yang kita dapat lihat tadi adalah Encik Mario datang sini untuk congratulate saya kerana telah mendapat award di Future Market dan juga di SimplyFX sebagai Grandmaster Mentor. Saya juga berterima kasih kepada mentor saya Encik Ahmad Zaki kerana memberi saya kepercayaan untuk memberi education yang terbagus untuk anda semua. Okey, mari kita balik ke sini. So di sini kalau anda dapat lihat tanda garis ini adalah di time frame day 1. Yang saya tandakan parabolic SAR yang pertama. So di sini apa yang kita akan lakukan, kita akan menandakan di sini, menandakan seperti ini. Kita tarik all along here. So di sini adalah area of resistance. So apabila kita nampak sebegini, harga tu kemungkinan akan jatuh ke bawah dan kita akan melakukan pending order di atas ini. So pending order di sini, sell limit, stop loss anda adalah berapa? Dalam 30 pip. Risk reward anda adalah berapa? Minimum anda ambil adalah dalam 100 pip. So ini adalah 1:3. 1:3 risk reward ratio. So 100 pips no problem. Di sini. Kalau di bawah sini seterusnya sampai 400 pip. So this is a very good technique bagi mereka yang baru untuk mencari support dan resistance, di mana ini adalah teknik yang bagus yang menggunakan parabolic SAR. Saya juga ingin advice untuk anda, kebanyakan trader apabila anda nampak harga jatuh ke bawah, saya menukarkan warnanya, mungkin kita menukarkan warna purple di sini. Okey, tidak berapa nampak sangat di sini. Saya menukarkan warna orange, ketebalan mungkin 3. Ini adalah pergerakan 1. So ni setengah orang memanggilnya ABC ataupun 1, 2, 3. So saya mengajar kebanyakan student saya, apabila anda nampak harga jatuh, jangan sell. Tunggu cari tempat pullbacknya. So di sini adalah pullback. So di sini adalah area di mana anda do you punya sell. Ataupun kalau bagi mereka yang belum mahir lagi, anda boleh sell di kawasan sini. So di sini adalah entry di bawah sini. So ini adalah entry anda. Entry di sini. Di sini ya. So jangan kalang kabut, especially bila anda nampak strategi itu berlaku, harga jatuh mendadak, kita jangan chase the candle. Kita mesti wait for the price to go to the area of support or resistance untuk kita get the best price untuk harga itu jatuh. So di sini stop loss 30 pip, take profit at least 100 pip minimum. So it's 1:3 risk reward. So mari kita tengok lagi contoh yang lagi satu. Contoh yang lagi satu di sini kita dapat lihat di sini. So tadinya kita dapat lihat di mana? Di daily, betul? Kita nampak di sini ada divergence. Nampak di bawah sini divergence, dan kita nampak di sini ada satu parabolic sah. Kita menandakan satu garisan di sini, satu garisan. Selepas tu kita pergi ke time frame H4. H4 di sini. H4. So di manakah garisannya? Ini adalah garisannya. So di sini garisannya, apa yang anda akan lakukan seterusnya? Kita markingkan di sini. Di bawah sini kita markingkan. So ini adalah kawasan mana? Kawasan support. So kalau harga menembusi sini, bermakna strategi itu sudah fail. So kalau ianya terus naik, that is you punya entry. So sama juga di sini, kalau anda dapat lihat, kalau di daily time frame, anda enter di sini, harga naik sampai 100 pip. But this is not the main entry. Main entry adalah di mana? Adalah di sini. Adalah di sini, kawasan di sini. So anda tunggu harga itu bergerak di atas. Make it a full punya movement, sebab kalau kita tengok dari bawah sini ke sini, ianya sudah 260 pip. So from here adalah 160 pip. So kita tidak sure whether harga ni akan naik ataupun jatuh ke bawah, fail. So di sini kita tunggu a pullback di kawasan sini. So we wait for the second movement. Second movement, so your entry will be here at where is the support are. Bagi mereka yang tidak tahu bagaimana untuk cari support, anda nampak di sini parabolic sah, anda boleh menandakan line di sini. So ini adalah entry di mana? Di orang kata setengah enter di pucuk-pucuk lah. Whereby harga tu jatuh di bawah and dianya bounce. Bounce, betul, naik ke atas. So di sini stop loss anda berapa? Stop loss 30 pip. 30 pip. Take profit minimum is 100 pips. Tapi di sini harganya naik terus sampai